This is a perfect trade to make $7,000 off of risking $3,000, and you can always close out this trade if Google falls even more. Hey everybody, welcome back. So today I woke up and I saw that the market actually went down quite a bit, just in the last day, and so yeah, it was actually up right before I went to bed, and unfortunately, when I woke up, I was surprised by how much stocks had just sold off. Really, because I think due to the federal minutes. Okay, so they're hinting that I think a lot of the interest rates and all the tapering is gonna move a little quicker, and so yeah, so that's just the reality of trading stocks and options. You really get a lot of movements. Okay, so and that's something that as you trade more and trade longer, you'll just have to get used to it. And so, fortunately, for me, this is something that I've gotten used to, and it's a very mental, very psychological thing where you really have to be okay with just losing a couple of $1,000s every day, depending on your portfolio. But like a lot of people have a lot more wealth than me, and they're losing tens, 20, hundreds of $1,000s just due to a 1 or 2% movement. So as you grow your portfolio, that's something that you have to really be prepared mentally, and just understand that this is really how the stock market works, and this is how things will be very, very often, especially I think in 2022, where I think we're going to see a lot of volatility, a lot of changes, ups and downs in the market, and so we got to be ready for that. Okay, so, but in this video, I first want to talk about just a couple of stocks that I'm going to add to my watch list. And I'm going to tell you why that's so important. And then I'm going to show you some trades that I think if you get into now, in the long run, you're going to do pretty well. Okay. And this, again, I'm going to be directing this at mostly at a smaller portfolio, but also I'm going to, kind of explain some trades that I think would be beneficial for a medium-sized portfolio. So medium-sized meaning, between 100,000 to $500,000. Okay, so I think everyone has different opinions or different thoughts on that, but just yeah, that's just kind of where I'm going to start. So first on the list is going to be Roblox. Okay, Roblox I'm adding namely because Nancy Pelosi, a Speaker of the House of Representatives, have added that to her portfolio. She made a lot of call options in 2020, at the end of 2020. And so there's something about Roblox that I want to keep an eye out on for, especially if there is some kind of discount. And today we did see that Roblox went down about 7%. Okay, so I think this is perhaps a good entry point. Okay, so taking a quick look at my watch list, I'm going to show you my watch list as well later on. Let's see over here. Okay, so Roblox is one. The other one that I want to add is Block. Okay, let me see. Okay, so basically Block is the old Square, and the reason why I'm adding Block is because Block is down quite a bit. Okay, so if you take a look at Block stock, it's down 8% as of yesterday. Year to date, it's down about 12%, and the last couple months has been down about 36%. Okay, so luckily I kind of sold off on Block, and so like a few months ago, but still, right? I don't know. I actually don't understand why it's down, and so that's why I'm gonna be taking a look into that and try to understand if Block is still something that I want to eventually add back into my portfolio. Okay, so there's Block stock, and then let's see what I got in my portfolio. Okay, so everyone should really have a portfolio. Over here's my watch list. So I have CPG, SoFi is definitely a stock that I'm trading a lot. I have Twitter on there, Tesla, of course, Facebook, Microsoft. Microsoft, I really just sold off not too long ago because I just felt that it was pretty high. I do think it's still a good long term hold, but for now, I'm trying to get more exposure into other stocks. Disney is another stock that Nancy Pelosi has in her portfolio, and Kevin O'Leary. A lot of different people have, because Disney is kind of down right now. It's down from its high, and this stock has a large moat. So I definitely want to keep an eye on Disney. I'll probably put credit spreads on that. Ford, Alibaba, Roblox, Square, and let me see here. So we got Facebook, Microsoft. Okay, so one that I know I want to add for sure is Palantir. Okay, so Palantir is another company that I've been trading a lot on, so I want to keep an eye out. And man, right now it is super super low, 16.99. Right, if you don't get into Palantir now, I don't know if there's going to be a better opportunity. So Palantir is one that you definitely want to take a look at, especially if you're considering, you know, adding a good quality stock to your portfolio. Okay, so got Palantir. Let's see what else we got. Palantir, SoFi, Ford. Okay, got Tesla. Oh, okay, Shopify. So Shopify is another company that's down quite a bit in the last couple months. So I'm going to add that to my watch list. And I think that's it for now. Okay, and I'm going to add Google because I don't have Google on there. Google is my biggest holding in my portfolio. So the fact that it went down like almost 5% yesterday was really really sad, but also a great time for you to get exposure into. And so yeah, Google was definitely a stock that I would definitely consider looking into as soon as possible. Okay, so now that I have a couple different stocks in my watch list, I'm going to show you how I'm going to be trading tomorrow, depending on how the market moves. But right now would be a wonderful time to gain a lot of entry into great companies at great prices. And the first one I want to take a look at is just Palantir. So Palantir, I've talked about this in some of my other videos, but they have a very large moat. They work very well with government contracts. They're getting into the crypto world. So there is just so much reason why I'm bullish Palantir. And the way I would trade Palantir, okay, is I would definitely start by probably selling puts. Okay, and if you don't already know, selling puts just basically means that, okay, I'm willing to buy the stock at a certain price. So right now, if I open up this put February 18th at $16, okay, so if Palantir falls below $16, I would be obligated to buy 100 shares at $16, but I'll get paid a premium of $110. Okay, so I would so first I would get a discount, $1 discount per share, so that's $100. Plus I would keep the premium, that's $200, to get in on Palantir at a really, really low price, in my opinion. And if Palantir never falls below $16, then I would keep the entire $100, and that's it. Right? The only risk really with selling puts is if the stock moves down even more, or if the stock shoots up, you lose out on the potential of like gains from how the stock moves up, right? And then of course you're gonna have some collateral tied up. Okay, so you're gonna have to have $1,500 or $1,600 on hand. Really $1,500 on hand, because if you get assigned, then you would have to shell out the remaining portion of what you owe to buy 100 shares of Palantir at $16. Okay, so the other stock that I want to gain more exposure into is HPQ. So I do like tech stocks, but I know a lot of tech stocks are very expensive right now. So, Apple, Tesla, all those stocks are very, very expensive. But HPQ, if you take a quick look at HPQ, I've talked about HPQ actually in another, or actually quite a few other videos, but right now it's trading at a really low P ratio of 7.29. They do pay a dividend of 2.57. So HPQ is a company that is solid. I'm sure many of you have heard of it. And so I wouldn't mind owning more of HP stock. So the way I would trade HP would be very similar to how I've traded Palantir. It would just be to sell puts. Okay, so again, I'm going safe because I really think 2022. I don't really know how it's gonna move, right? Like I think with so much going on with the federal tapering, with the inflation, like the Fed has to do something about inflation, right? And I don't know how that's gonna affect the market, so I'm gonna go safe. I'm simply gonna sell puts versus buying leap options. Okay, so in 2021, I bought a lot of leap options. I was very bull. I just kept thinking that these stocks are just going to continue to go up. But 2022 is totally different. I'm not. I'm totally. I'm moving away from selling leap options. For the most part, I'm still buying a couple of leap options, but I'm doing more so a more conservative approach. Just really getting earning premium on stocks that I wouldn't mind owning. And if there is some kind of correction, if the stock market really moves down a lot, that's fine, right? Because I would gain exposure into great quality stocks that I can hold on to for a very, very long time. I'll be perfectly fine with keeping them for 2, 3, 5, 10 years, make dividends, and I would get in at a fairly decent price, okay? And on top of that, I would get paid premium. So I'll probably look into selling puts. So right now, if I sold puts for HPQ, I can gain $55, $80. Honestly, I would probably sell it a little further out to make it even more conservative. And the reason why is because, yes, I know a lot of people have been asking me, hey Daniel, like why do you sell puts monthly or weekly, or just not like why do you sell it so far out, right? And my response is just basically I want to collect more premium, right? The more premium I get in case of a correction or in case of a really, really sharp down movement, at least that premium would sort of hedge me against that big movement. So for example, let's say HPQ drops down to $30 because everyone's selling. There's panic in the markets. At the very least, I would get paid a lot more, $200 versus $60, $70. And so that would essentially help hedge against some kind of correction, if that sort of makes sense. Okay, and these are all stocks that I really just wouldn't mind owning for a very, very long time, and I want to get in at as cheap of a price as I can. Yeah, and this is the reason why I also talk about Interactive Brokers, because a lot of people then ask, well, why do you have, then how do you kind of combat against the collateral that you're held up with? Well, with Interactive Brokers, you can use that collateral against for buying other positions. You can withdraw cash from the ATM and so on and so forth, right? Using something called margin. Okay, so I talked about this in some other videos. But yeah, so I'm really mostly selling puts. Now let me show you just one more trade that I really have high conviction for, and that is Google. Google, everyone's been talking about Google. A lot of people in Congress is buying Google. There's just so much in the pipeline for Google, and it's trading honestly not at a really, it's not that expensive compared to its peers, right? If you take a look at Google stock, trading at 26.51. So right now it just dropped down 4.68%. I think is a perfect time to buy. But let's say, you don't have like tens of $1,000s to buy, a couple shares of Google. Instead of buying, just shares of Google, what you can do is you can sell a put credit spread. Okay, so what that looks like is I would probably go out into, as far as September, but probably even June 17th. And I would simply, if I had saw this earlier, I would have definitely jumped on this. That is totally fine. I'm probably going to do this tomorrow. So I would go ahead and sell a put credit spread. And what that means is basically you're betting that the stock will eventually go up. Okay, so the stock goes up by June 17th, you're going to make money. Okay, if it doesn't, then you're going to lose money. You're going to lose perhaps up to everything if you don't close out your position. But if for some reason Google actually drops a lot, then you can always close out your position. So it's very likely you won't have to lose everything. Okay, so so you would go ahead and buy a put. Okay, so you buy a put, and then you will just sell a put above that strike price. Okay, so now, okay, so you're gaining exposure into Google. If Google doesn't fall by more than 0.61%, by June 17th, you're gonna make $255. If it does go down for some reason below that, then you start to lose money. Right now, that sounds like very, very little money, but you can change that a little bit. Right, you can put a credit spread at a higher strike price, where you buy a put and then sell put closer to the share price, and now you're gonna increase a little bit. Okay, so what you can also do is you can go a little closer. Okay, I don't know. I actually don't know why. Normally these spreads make you more money. I think right now it's just because the market's closed. Oh, let's check out this. So if you take a look at April, right? April, we buy a put, we sell a put at a higher strike price. So now you can make up to $590. Okay, so let's check out March. If you open up a credit spread for expiring in March. Okay, wow, look at this. Now this may be a little off because the market's closed, but if you sell this spread right close to strike price, you can potentially make $4,000, so long as Google, if Google goes up by at least 0.26%, you start to make money. Okay, so there's different kinds of trades. You just have to identify different strike prices. If you're even more bullish on Google, which this might be kind of interesting, you can sell a put credit spread above the share price, and now look at that. You can potentially make $6,000 off of risking $3,000. Okay, so that would be a really interesting trade. Let's go even further. Okay, I'm gonna just go kind of wild here. We're just gonna have a little fun. Let's just say you open up this trade right here. Okay, so now you can make up to $7,000, and Google would have to go up about 6%. Okay, so that's not a far fetched, right? Like if Google simply recovers to what it was just a couple days ago, then you're already almost there, right? And you can always close out the spread well before the expiration date. Let's say, Google does pop up and you want to sell it. Perfect, right? You would have made a couple G's just by this trade. So yeah, guys, if you have a small portfolio and, let's say you don't want to risk a lot of money, this is a perfect trade to make $7,000 off of risking $3,000. And you can always close out this trade if Google falls even more. But this is actually a trade I would definitely highly consider, because I really think by March Google is going to pop back up to 2,900 something, right? So I think that's a very, very, very high probability of Google happening to pop up, and then I would have gained $7,000 through that trade. All right, everybody. Well, I hope this is helpful for you. If you like this kind of content, make sure you smash that like button for the YouTube algorithm. I would really, really appreciate that. Comment below if you have any questions, and subscribe if you haven't already. And I will see you guys in the next video.
With every star, we are